What's poppin'? What's poppin' in the city over here? Oh. I'm not trading the close here. I just thought I would stream for fun. What's poppin', guys? Big sell-off today. Yeah. Not that big, but big enough. What's poppin' with you guys? I'm still kind of getting used to my new setup here. Kind of got a new screen, so now I have 4 screens. So I don't really know like exactly where. It's a little tricky because it's not that bad. I'm just gonna fix this really quick. Someone's calling me. I'm gonna make sure my phone's on airplane mode. There we go. That should be better. Quad witching, yeah. Avoid it. Trust me. Stay away. Stay away from the close. Stay away from the crazy market. Stay away. Alrighty. All right, let's see what we're working with here. I mean, first of all, this music's really bad. I just thought I would put it there just like put an ambiance, but I find it kind of bad. So I'll just kind of keep it like low key. So I'm not live trading this close at all because I saw what the markets looked like today and they were bad. Okay, I can't do this music. It's over. You're out of here. You're out of here. Okay, let's look at what the market's doing here. This is a daily chart for the NASDAQ. Okay, for me, this is the big contextual area here. These 333s for the daily chart up to these 360s. 368, this is like really make it or break it. If we get back above that, you can see a rally, bigger picture here, back through the range again. Right now we're below it and we're holding here. So contextually, it's not really bullish on the daily chart. Let's see about the 15-minute here. So this is seems as though we've faded from today's morning's trading, more or less. And let's just give it a bit of context here. So 15-minute zone looks right there. This 339, I can get rid of it, or I can move it like right there. These were contextual zones from the prior day. I think I can remove this one and put it right here. So this is the context we're working with on a 15-minute basis here. So in my opinion, now where we currently stand, it's a little tricky, but the market is still seems to be favoring bears here ever since these areas. So I don't know what is going to happen. Now if we look at if we zoom in a bit, you can see these bigger trading ranges here, these big rotations, and this is part of the reason why I don't like quad witching and options expiry in general, is because we see this type of trading. You know, you get a big rip down, then a big rip up with no pullbacks, and then when it's done you get a big rip back down with no pullbacks, then you get a choppy range in the middle of nowhere, and then you get another big rip down, a pullback, and then straight to the lowest tick, and then a big rip up to the top of the range, and then chops for a while, and then it chops more, and then a big rip down, a big rip up. So you guys know what I mean, in the sense that this price action is just really, really, really bad to trade. And I've noticed this on all options expiries, especially options expiry day. And I've just made it a point to try to avoid it as much as possible. And yeah. So I hope that helped the 6 people that are watching right now. And that's what it's all about. Let me see if I could find a better copyright-free playlist. There was 2 of them. There was one there, and what was the other one? Let's see what Spotify's got. Copyright free, mate. It's pretty chill. So I guess we can chill and make chart books stuff. So let's work on these chart books. So here's one for the Russell. Now what I'm actually going to do is I'm going to copy this chart over to other chart books. All right. Switch that symbol to RTY. Volume of price 2. Standard deviation. So let's change the ranges here to, I don't know, put a 12 tick. 12 tick seems alright for RTY. This chart right here, I'll get rid of it. And where's the one I just had? No. Where was it? Here it is. Bearish stage, chop range sideways. Yes, sir, boss. That price scale looks a little weird, doesn't it? Yeah, it looks very weird. So what if I did, sorry, what if I did this? If you guys have any questions about trading or CR charts, let me know. But yeah, that price scale does look a little bit weird, so. As long as it's highlighting them on the DOM, alright, that's not too bad, so. It's just weird how the price scale looks so thin. Whereas on other charts I've had, the price scale is like so much wider. And I don't quite understand that. So that's something I gotta work on probably. I guess it probably depends on the symbol, so. Let's put the RTY up here. That looks fine. Not messing with them like plants. Save your, yeah, bro. Save your mental strength. Save your money. Save your money for the beers. You know, there's a million better things you can save your money on. Rather than trading this close today here. So I'm just gonna be chilling here working on chart books, I guess, so ask me questions. Seems like a reasonable 12 tick standard deviation there on the ruts. So what I'll do here is I'll just overlay that other study. So So what are we overlaying here? We're overlaying 15. Let's overlay this one now. 12 tick range. Overshoot. Let's overlay the overshoot. Chart region 1. And there you go. So that looks pretty reasonable. Already up a little on the day 2 trades. That's all you need to come out alive. Yeah, man. If you're alive on a day like today, congratulate yourself. You deserve a beer. Alright, let's fix this ES chart book now. So what I'm actually going to do is duplicate this chart now to the ES chart book. Alrighty, let's go ahead and change that symbol. So this is ES here. It's going to be sort of 3R. What range ticks do you guys use for ES? I've seen guys use a 4-tick range chart. I think 4-tick is kind of the sweet spot. I don't know. I've seen guys use a 1-tick range, but that's a little too crazy. Like, wow, every tick you're getting a bar up here. I don't think that's very good. I like the 4-tick, but you guys let me know what you think of that. So again, there we go. That looks pretty reasonable, actually. Again, displaying the overshoot is pretty cool. It's something that I was working on the other day. So we have a dome for the Qs. Just kind of clear that delta off. Volume of price MULT here is going to be switched to 2. Cool. And the scale size should be 14.5. That's perfect. And for this ES DOM now, what we're gonna do is we're gonna overlay a couple of studies here. So ES 15-second chart. Okay, so it's overlaying the. Okay, it's overlaying that. Study price overlay, let's fix this now. I'm gonna overlay 2 studies on this DOM right now. So from our 4-tick range, we're gonna overlay this. There we go. And we are also going to overlay another. Apple crushed me today. Sorry to hear that, bro. Make sure to put it in chart region 1. There you go. Get a bit of an overshoot going on there. I'm just playing with that. You know, it's just an idea I had. Listen to Boss Man next time. Yeah. I don't know, bro. No, I've been pretty up and down in my trading this week. Actually, this week was kind of garbage. It was actually pretty much garbage for me. I lost some money. Not big amounts, but enough that's fucking annoying, you know? So now we're getting a bit of a rip here. Now, I'm thinking I don't really need this, but anyways, I'm playing with these ideas. So if you guys are curious as to what I've got going on my DOM here, basically I was thinking of, because I trade in a way that is I favor mean reversion trades more than I favor breakout trades, and there's a big reason as to why. So basically my trading strategy requires me to measure things a lot. So I find displaying the standard deviations directly on my DOM, and they're constantly moving around like this, is a great way of doing that, as well as displaying the overshoot. And the overshoot is basically what I call a half a standard deviation. And obviously nothing's perfect, because just because the market standard deviation is whatever 5 points doesn't mean it's going to stay at 5 points, but it's just giving you like a ballpark figure as to how much we've been moving around, you know. So I know how much I should be scalping for, you know what I'm saying? Instead, like, and this is like something I always mess up on, where, you know, you're going for 5 points but it's only moving 4, you're going for 7 but it's only moving 5, and then you took a profit at 5 but it's actually moving 8, you know. So if you're not in tune with that, you're never going to be profitable, because you're going to be scalping for, you're either going to be going for too much and your targets are never going to get hit, or you're going to be going for not enough when the market is moving and not capitalizing on that movement enough, you know. So I feel like just really staying in tune with how much it's moving for me is like what I'm trying to really get better at. And again, it goes back to the reason why I hate trading on days like today, where you get these whipsaw movements, you know, 20 handles up, 15 handles down, 20 handles up, back up. So screw that. What I like best is, see, like now, this is a little bit more reasonable here. Where you have some just kind of clean rotations. Market's kind of mixed here. So what's going on here, Vlad? I see you typing a lot. Just gonna make sure to save all my chart books. Man. Yeah, breakouts are tricky, dude. Let's look at Apple. Start with the daily chart. Ooh, not super bullish, I gotta say, but we're into some kind of demanding zones here, I gotta say. So, you know, you could say here, demand here, potential demand here as well, but it's a little bit of a gray area, basically right around this 46.5 kind of area, daily chart demand zone. But if you look very closely here, it's actually right there, 47s. So if it gets back above 47s, it can be pretty bullish here on this daily chart, Apple, but it's bearish now below 47s. That's what I'm trying to say. So 30-minute chart, it looks like it's starting to turn up here with the NASDAQ as well. I'm looking at the NASDAQ rally a bit here. We've seen some pretty strong buying coming in. If you look at the 30 on Apple right there, again, right there is the battle zone right here. 46.5. It's not magnetized. I think it should be to about here. So I predict a close today probably below 46.5, or we might see a little rally right now quickly to this area, and it might just close there. Or it might just stay here, who knows. Again, quad witch, you can't predict much here. So let's look, for example, here. Let's try and trade this demo account, for example, okay? So 26s, okay? So let's say I place a buy order here. Oh wait, trading is locked, hold on. You see, look, we traded up, did volume higher, and now it's going for another leg right away. Whereas on a normal day, which you'll see is probably a pullback. But see, that's where I would bid. In this case, this is the type of movement we have been seeing all day long. You get a move, you get absorption, you get another move in the same direction. You get absorption, and it keeps going, and it keeps going, and it keeps going until it stops. And then when it stops, it's over. And then it goes the opposite way. I don't know. But that's kind of what we've been seeing, you know. Whereas on a regular day, this is what NQ will do. It'll pop up really quickly, chop, get some buyers, and then boom, you get a smash pullback down, take out any weak buyers that got in late, and then it'll smash back up, and then it'll keep going, you know what I'm saying? So that's the kind of movement I like, personally, and I find that's really like tradable movement, not these moves that go 15, 20, 25, 30, 35, 40. That's quad witch type of movement, you know? And if you don't know that, you're gonna get destroyed. So I have my bid here, my lonely bid, which is not gonna get filled. We're up here at 39s now. Man, 20 evens was the area I was gonna bid earlier. So 20 evens down to about 18 here is the area to watch, in my opinion. If it gets below 18, 1750 again, this is not a buy at all, in my opinion, but who knows, maybe that'll be the area. So watch 18s here. $19 offer, $17.50 offer. Sellers, watch it, offer $17.50. My data looks choppy. I'm gonna disconnect and reconnect. Whenever I see that, I do that. Also because I'm running a whole bunch of stuff at once here. I'm running interactive brokers, I'm running 2 instances, I'm running Price Squawk in the back, I'm running Spotify, and I'm running YouTube. It's too much crap. This is a sell here, I think. Yeah. Now it's too late, you'd be chasing. Trader Matt was safe. Yeah, he took the day out. Good for him, man. That guy's not a trader, in my opinion. He's a gambler. So I don't gain any insight from looking at his stream at all. At all. I don't gain any information. Even fading him is not beneficial to my trading style. Because the way I trade doesn't have anything to do with the way he trades. In fact, I'm trying to avoid that type of trading completely. I'm trying to change my mentality for trading, actually. More towards being a liquidity provider and less towards being a betting type of trader, that I'm always gonna bet, you know, I'm gonna bet that the high is gonna break. I'm gonna bet that the low is gonna break. I'm gonna bet, I'm gonna bet, I'm gonna bet. That's what most traders are doing. They're always trying to bet. I'm not trying to bet. I want to provide liquidity at spots where I think that the market needs the liquidity. Scalp my way in and out and just get out and just do that over and over again and be consistent. Because I believe that NQ favors the liquidity providers on the average day. NQ favors liquidity providers on the average day, I think. That's what I believe. Now this market looks like garbage here, trading at these 12s. It's probably going to keep going, who knows? Let's see how I'm doing for performance here. OBS is using a lot of power. Sierra chart also, because I have it set to be optimized. And that's about it, really. Price clock's using nothing. Let's watch the shenanigans here. Denali Exchange data feed, baby. That's the Denali Exchange data feed. The best data feed ever. Says by me. Says who? Says me, motherfucker. All right, let's look at what you guys are saying here. Auto, I don't know. I don't know about trading view with level 2 data. I do not know, sorry. If you do need to see accurate level 2 data, you're not going to see it on TradingView, that's for sure. Better get yourself a data feed where you'll see accurate level 2. Interactive Brokers is pretty good. I don't know what products you're looking at either, but for futures, like I just told you, Denali is the best. You can quote me on that too. Yeah, boy, yeah. That's what it's all about. You know, some people are saying like, you know, Sierra Chart's always trying to promote their own shit. That's true, but you know why? Because their shit's fucking good. At least I found it to be good. I bought a Mac Mini 8 gigabytes with Apple Silicone. Nice, dude. That's crazy. It sounds crazy. I don't know what it is, but it sounds crazy. Very much agreed with you, sir. Very much agreed. Except maybe here's IB's charting for you. I mean, for daily charts, it's not too bad, right? So I'm sure you guys have heard of the saying stocks go up or stonks go up. Well, this is what I call REITs go up. REITs go up. That's my saying. REITs go up, baby. NASDAQ chops like crazy. You can quote me on that too. So just in case you guys wanted to see what just happened, we had a big rally and then a big dump, and now we're chopping. Classic. And now, since it's quad witch, anything can happen, right? So place your bets, traders. Where are you gonna place your bets? Well, I just finished telling you I don't like betting. So if you don't like betting, how are you gonna trade it? Well, I wanna provide liquidity in places where I think the market needs it. Where do I think the market will need liquidity? I have no idea. So that's it. Look, it's going up now. We're 5 minutes till close here. We're rallying up. The offers are pulling. 21s, 25s traded, 27s. Maybe if you bid at 15s, you get something. 16s. If you bid at 16s, you might get a scalp to like 20 or something. Let's see. Or maybe you won't at all. Let's see. We're trading 21s now. 16s traded. Let's see if I get the 21 scalp. If not, I scratch. Nope. Traded 1975s. We're still in the edge though. 18s, 17s. Come on, we should get it. 21s. I'm gonna scratch. I scratched it because it took too long. But I'm running too much stuff anyways. That's why I noticed my data is not as super duper fast as it normally is. But you like that, you see that scratch, right? That's the kind of trading I take, right? The market was valued at 21. I scalp them at 16. If I get the edge, I get it. If I don't, I scratch it for a point or two. That's how I trade. I don't just try and sit there and fucking 5-point drawdowns, 10-point drawdowns, 20-point drawdowns like some of you motherfuckers do. I'm just messing around. Level 2 data. Some say yes, some say no. It really depends. I do believe the level 2 data is important because it's basically the intent to trade. That's what level 2 data is. So you see on this order book right here, you see that 142 lots here, 200 lots? That's a bid that someone intends to buy those contracts. It doesn't mean that that order is going to trade, but it's representing that somebody is showing an intent to want to trade at that price, to transact at that price. So the order book is important to look at. What I would say is more important is the actual trades that are trading through. So now you can see that bid there is holding it at 20. I think it's about to trade though. It's looking for a seller to trade against it. It'll probably trade. What I've noticed in MQ is when you see big orders and when they trade, something happens. The price moves right away after. Again, not really something you can maybe build a strategy off of, but yeah, so you see how the bid's holding the price up. It's just chopping this 21.50. No one wants to take it, but I think someone's gonna take it pretty soon. If they don't, I'll be surprised. Normally when you see big bids like this, they take them. Shut it off. I'm on demo actually. I'm on sim here. That's what I'm saying. I'm just messing around. Who was saying give it a second and it's gonna pop. Stay and trade longer than 30 seconds. Yeah, I wouldn't do that, especially now, especially during this garbage. Never, bro. I got shithoused yesterday actually into the close. I made a big mistake. I took 2 full stops from being a fucking degenerate. Yeah, DX feed is cool. I know what you mean. So there we go with the rip. Now, good luck getting on any pullbacks. You're not going to get one, okay? This is quad witch. You're not going to get a pullback, guys. You got to move from 22 up to 37. Now, you think you're going to get a pullback? Think again, boy. You ain't going to get it. Okay, here's one. We got 31s here, 32s. Last minute of the market. You're not playing here, not playing around. Hey guys, if you're sticking around for the stream, don't forget to like the stream because it really helps the YouTube algorithm. Just smash that thumbs up. If you want to smash the thumbs down, you can do that one too. But thumbs up would be a little bit better. Thanks. That's a good question, actually. What difference between trading on market hours versus pre and post market? Any real difference? Yeah, there's a big difference. I don't know all like the technical reasons behind it, but basically when the market opens, when the cash market opens at 9:30, that is like the official bell that institutions start doing a bigger transaction volume. So this is why at 9:30 you get a flush of orders hitting the market, and also into the close of the market as well. Like right now, you're seeing a big flush of orders in either direction, and institutions are closing out trades, they're hedging their books, they're doing crazy stuff. It's not a tradable environment. That's why you'll often hear about traders saying they avoid the first 5-10 minutes of trading, they avoid the last 10 minutes of trading, ideally the last hour completely, but it depends. Because you get this type of movement, right? We just saw this rally up and we have a pullback, a non-stop pullback, right? You want to buy the dip? Sure, buy it. It goes lower. You want to buy the dip? It goes lower. Want to buy the dip? It goes lower. So pretty soon you had to move up by 10, 20 points. Then you have another move down by 10, 20 points. That's the type of activity that, in my opinion, no worth even trading it. Don't even bother. But again, to each their own, right? If you want to gamble on it, go. So to answer your question in a better way, the volume is a lot lower in pre and post market trading. And the only volume you're going to find is going to be in this futures market, basically. Unless there's like news after hour or whatever. Oh, I just realized that I was on this screen the whole time. Oh gosh, I thought I was on this screen. That happens to me a lot. That happens to me a lot. Buy one NQ. Yeah, okay. Where did you buy it? Here? Or here? Either way you would have been wrong. If you bought it here, here, or here. If you were trades by Matt, you would have bought it here, here, and here. Nothing against the guy, but whatever. Yeah, that's what it's all about, bro. Alright, let's do some fancy business here. I've actually got 2 instances of Sierra chart running. Watch this. Boom, second instance. Now, where's my watch list? Here it is. I bought one forever hodler now. You're a forever hodler. 10 years caught a bit of a bid these last couple of days here, which is kind of interesting because I was watching the Well, I'm talking about the 10-year yields here. This is a 10-year yield from the small exchange, 10Y SME. I've got a watch list here for these products. Pretty cool. It's pretty cool I can get them on Sierra charts. I'm still working on this chart book, but I think it's cool that I can get the charts for these on Sierra charts. So 10-year yields closing up here 2.5% on the day. Kind of cool. Oil, I guess this is the wrong contract. Let me change this to the next month contract. So 10/21/10, okay. And let's see if this, yeah, there we go. Now we got the right contract. If you guys want to know how to put in symbols into a watch list in Sierra Chart, interactive broker symbols, I read the documentation. It's a little bit tricky, but this is how you do it. You put the symbol first, in this case SMO, you do a dash, then you do the year and the month expiry, in this case 2021, 10th month of the year. Then you do a dash after that. Then you have to write the exchange name, which in this case is SMFE for the small exchange. And then you do dash, and then you do the currency, which is USD in this case. So you just saw me roll over the symbol here from September to August, and now we can see that this is the contract that has trading here for oil, 71.83. Oil, it's pretty crazy if you ask me. I'm actually going to do the same for this contract. There we go. We got volume there too. I wish they would automatically roll over, but there's no option to do a continuous contract for this in Sierra Chart right now. And if there might be though. I'm going to roll them all over here. So I changed my account type to margin, from cash to margin. I'm worrying that I could unintentionally might get loan. If I always buy stocks based on how much cash I have, I will not go negative rate. Okay. What you got to keep an eye on is your maintenance margin level in your account. So when you're in a margin account, and it's actually interesting you mentioned that because I just finished filming a video talking about margin accounts. I should have it uploaded by tomorrow. So that's pretty cool. So in a margin account, every trade you make is subject to a margin loan, unless the broker is not offering margin on that ticker. In that case, your account will not be affected. Let me just fix this right here, and I'll continue answering your question in a sec. So that's where we're at here on the NASDAQ. In case you want to know what quad witching looks like, that's what it looks like. Big rally, big dump, big rally, bigger dump, chop. Yeah, so keep an eye on your maintenance margin because that's the number you got to keep an eye on. If your liquidity in your account is getting too close to your maintenance level, then you're going to start to get notifications from your broker saying, hey man, we're going to liquidate you unless you add money to the account or you close off the position. So, and that's what's going to happen. So when you close off the position, it's going to lower that maintenance because you're opening up more buying power in your account. You know what I'm saying? So that's what I got to say. Be careful with your maintenance margin. Do not get too close to that. Did you make some trades today? No, I think I had one trade today in my live account and I scratched it for a 1 point loss or a 2 tick loss. It was a good scratch. It was a great scratch, in fact. That's something I'm trying to get better at in my trading, is when I have a good trade, I will say good trade out loud. That way, you know, I give myself a pat on the back for that, you know. If I made a mistake, I will say bad trade. You made a fucking mistake. what do you need to do to fix this? You know, I try to be very honest with myself when I'm trading. That's something I'm trying to get better at. If I had a good trade, I will say, good trade, great trade. That was a great trade. Let's do it again. Let's keep focused. Let's do it again. Great trade, etc. Or good scratch. That's another one. Good scratch, great scratch, you know? Scratching is essential if you're day traders. If you're a scalper, scratching is essential, essential, essential. In fact, my whole strategy relies on me being able to scratch trades. If I can't scratch it, I'll never be profitable. That's 100% true. So in the video I recorded just now, I talked about a few of the benefits and the cons about having a margin account. One of the benefits is that you get more leverage, but the thing is that it depends. For example, let's say you have one account, you just want to buy dividend stocks and hold them. In that case, you might not necessarily want a margin account, because you don't want to be worried about your account getting too close to maintenance. You don't want to be having to worry about those things, you know? So in that case, it might be better off to switch your account to a cash account. That way you won't have to worry about your position values dropping ever. Just remember, in a cash account, there's certain other things you got to be aware of, like the T2 settlement. So you're going to notice right away, if you exchange money in your account from USD to euros, and then you want to withdraw the euros, you won't be able to do it until 2 days after the trade, because it takes 2 days for the trade to settle. So like things like that, you got to be aware of in a cash account. In a margin account, they allow you to withdraw them right away. You do the transaction, you can do another transaction right away normally. So yeah. Yeah, man. Cheers. I don't know what Vlad's talking about with this candy over here, but it's pretty funny. Anyhow, so that's where the Nasdaq closed here today. About 300 bucks here on the Nasdaq. Pretty bearish close, I gotta say. Pretty bearish close for the Qs. Closing below key daily structure. We do not know what the weekend holds. We can get news, we can gap down. Pretty next thing you know, we're trading down here. Next thing you know, we're trading at zero. Anything can happen. We never know. That's the point of, you know, that's the advantage of being a day trader, is that we don't hold shit. You know, you get to sleep easy, but your days are rough. Your days are rough, but you get to sleep easy. Looking at the S&Ps here, closing pretty much close to key daily structure. This is kind of interesting. I like this, actually. I like this area right here for key daily structure right there. And looking at the S&Ps trading on that 1 minute chart again, look at that. Look at these movements. Key for quad witching movement. Just absolutely ridiculously face ripping moves that make no sense whatsoever. Like this, for example. Big rally, big dump. Chop. Chop. This is all right. This is decent trading. So you get like portions of decent trading activity, and then the rest is like bad, kind of. So I would say this right here, starting from about here, this looks pretty decent right here. You got some nice kind of trendy movements, and then you got this fade activity going on around 1 o'clock, and then you got the move start to accelerate down. Go for new lows, smash the lows straight into a big rally non-stop, no pullbacks. That's something you gotta know. Quad witching, no pullbacks. Look at this. Straight up, straight up, straight up, chop, straight up, straight up, straight up, up. And then when it's done, it goes straight the other direction, all the way down, straight the other direction. Now when it's done this, then you can get a bit of trading activity here. You get a bit of chop trade. This is some pretty good stuff. Again, I'm just kind of going over the kind of price action that I prefer to trade in, and like why quad witching is really not ideal for me. So this is pretty good. you got to move down back in through the range, lower end of the range, face ripping rally back through. And then again, this is some pretty decent trading right here. Just briefly, you know, actually this is pretty good. You get a trading range, pop one side, pop the other side, pop the other side, then pop the other side. That's crazy movement actually. This must have messed with a lot of traders right here. Guys who are trying to hold trades and stuff. Oh my god. It will just rip you in both directions basically. This is the type of trading that rips both longs and shorts. Maybe good for scalping though. Again, just look at that movement. You have this trading range from 21s and a half to 25s. You get a movement up, or so you get a movement, take out the low by a tick or two, and then straight into a face ripping rally to the other side of the range completely. And then it slowly fades and then straight into a dump to the other side of that completely. And then again straight into a massive rally to the other side of that completely. And then straight into another massive dump all the way to the other side completely. That's just probably just horrible price action. And then again, look at that. Oh my gosh. It's just disgusting. So if you can take anything out of this live stream right now, just learn that a lot of traders avoid quad witching completely and options expiry. A lot of traders avoid options expiry. I've learned the hard way many days trying to trade on these days, you know. And there are also the types of days that if you do not use a tight stop, you have the potential to get face ripped and margin called. And you do not want to be that. So that's all I got to tell you guys today. And if you have any last questions, drop them in the chat. I'm happy to answer them. I saw a few questions here. Just give me 1 second. We can take a look at the bonds really quickly, or 15-minute chart. Yeah, there we go. We got the 10-year selling off, and the 10-year yields were rallying the last 3 days here. Kind of interesting. And actually, this dump here was kind of set up too, as it couldn't hold that 12.5. Good fuel for that movement. So let's see here. What are these questions? Exactly what you're saying. This is true, sir. So I would say a cash account is more for if you're doing kind of longer term holds and you don't want to have to worry about your maintenance levels getting too low or anything. When to scalp? This is a great question. It's going to depend on the day and the amount of volatility in the session. One thing you got to be aware of is that a lot of pros and institutions are doing business as soon as the market opens and before the market opens. So I would say from experience, there's some times that are really annoying to trade in the morning. Generally, it's not ideal to trade right off the open. At least I found it to be not ideal for the way that I trade. The way that I trade, I'm looking to scalp volatility, basically. So I'm not looking for giant movements. I'm basically looking to scalp the volatility. Now, when the market is moving very irrationally and there's a lot of orders hitting the book and moving the price every which way, it's less of an orderly market to trade. It's very not ideal for trading, for scalping, especially in NASDAQ, because you'll get these types of movements like we've seen today, where you'll get a face-ripping rally, 305, 310, 315, 320, 325. And in my opinion, that's not what trading is all about. Trading is not about trying to predict these big moves that are happening, and trying to follow and chase big moves, I don't believe trading is about that at all. I think the job of a trader is simply to provide liquidity where it needs to be provided. That should be the job of a trader, at least. I don't know. But again, guys, you're listening to a guy on YouTube. Take everything I say with a grain of salt, always, It really depends on the day. There's not a best time. This is one rule that I follow. When the market's opening in the prior day's range, I tend to wait on the open. I do not trade on the open if the market is opening within the prior day's range, especially if it's like right in the center of the prior day's range, because you do not have any idea of what's going to happen. The context is telling you that the market is balanced and that you do not know what's going to happen or who's going to get tested. So, you know, on days like that, you can often get these types of movements where you'll get the open within the prior day's range. It'll go up, rally, test one side, or maybe you'll get a pop rally for the first 10-15 minutes. You'll get everybody looking to the long side, and then you'll start to get this death grinding pullback, slowly fading, and all traders are now thinking on the long side. Yet the thing keeps on fading, and it keeps on fading, and it keeps on fading, and it ends up going all the way to the other side of the range. So that's kind of why I tend to avoid the first 15 to 30 minutes on days where the market is opening in the prior day's range. So that's one rule I have. I learned it from a mentor, and it has helped me to stay out of trouble on a large amount of days. Am I a full-time trader? I guess I would say I am, yeah. I don't make full-time income from it because I trade the micro products. But I am confident in my methods of trading. That's one thing I gotta say. It's just that on a lot of days, the skill is really learning how to not trade, if you know what I mean, and to really filter out for the right moments for trading. So I would say the skill with trading NASDAQ is exactly what I just said. It's knowing when to not trade it, or giving yourself a way to filter for the right movements to trade on. You know, so everything you see on my screen here, all of these things are helping me to filter out where I should be placing my orders and on which moves I should be looking to trade off of. So I'll often use this stuff right here. These are the deltas and the volumes every 15 seconds. And again, 15 seconds is subjective, but it's just a way of seeing the kind of volume that's trading. You know, so I'll wait for a signal that pops up right here, and that will give me a signal of momentum in the market, and I'll basically say, you know, okay, this is a move I should be watching now. I'm going to start putting in some orders now because the market is now indicating to me that there is some momentum, there's a movement occurring here. So I'm going to trade on the back of this. So I try as much as possible to get better at filtering out for the right movements to trade, because in NASDAQ it looks like you can trade any movement, and that's where everybody messes up, because they're always trying to chase the momentum. With things going up 3 points, you start buying it, then it reverses on you, and then it starts going down 3 points, you try to sell it, and then it reverses on you. So it really comes down to which moves are you going to trade on the back of and which moves are you going to avoid. Yeah, that's the skill for NASDAQ right there. I mean, yeah, sure, I know traders who trade off the open, but again, it's subjective. It depends on the kind of strategies they're trading. It depends on the markets they're trading. Futures markets tend to be more rotational, meaning they rotate more, they move around in ranges more. So depending on the market context, there are certain times where there's just a lack of clarity, and it's just better to avoid it, right? Like I was saying before about the open, there's a lot of institutions that do business on the open of the market. That's when you see a big flush of orders, right? So I know my edge as a retail trader is not to be stepping in front of Goliath orders. You know, when I see like a bunch of orders coming in, the price is being whipped around every which way, for me, that's not an indication of a good trading environment, right? So I think it's really a matter of just identifying the different trading environments and which trading environments that you know how to read and that you perform strongly in, and that are tradable environments. And this is very hard to do. That's it. But yeah, there's a lot of strategies out there. Like if you trade stocks, there's strategies you can trade for stocks that favor trading off the open. Things like open range breakouts, you know, these things can work quite well. So again, it all depends. I think my method, it tends to perform best as the session is developing, right? Because I like to get an idea for what the volatility is like, and if the market is favoring range plays, or is it favoring those momentum breakouts. So again, how can I describe what I just told you? Is is exactly that. So today, for example, you have this type of movement. You might have a really tight range, and then all of a sudden you get a movement outside the range. And then, well, basically, for example, this is how I do it. So you have, on average, how much is the market moving? Let's say a standard deviation is around 5 points. 1.5 standard deviations is approximately the range that the market should stay in. If it's closing outside of that 1.5 standard deviation from what is considered to be the average rotation, then normally that's considered to be a breakout. I consider that to be a breakout. So there are some days that favor this movement where you have a trading range and then you get the market moving outside of the 1.5 standard deviation, and it's closing outside the 1.5 standard deviation, and it continues to rip. That's some days favor this, okay? Other days, the majority of days, favor the opposite, where you get a trading range, you get a pop, 1.5 standard deviation, it does not close outside of that range, and then you get a movement right back into the range. And that's what you call a fade trade or a range play. And I favor those types of trades a lot more. But again, not every trading day favors that. There are some days where the market will do exactly what I said. You get the trading range, it starts going to the one side, and then it rips. And you get another type of day where you're getting this type of action, where you have your trading range, 1.5 standard deviation, rotates back, comes back in, builds volume, 1.5 standard deviations lower, bounces from there, comes back, builds volume, and it's more of an orderly market. That's what I would consider to be more of an orderly market environment, rather than this type of environment where we're seeing orders smash the book in every which way, orders pulling out of the way, and then you get these face ripping rallies that really, it's not an orderly trading condition at all. It's very bad trading conditions. So yeah, I kind of like talking about this stuff because it kind of helps me strengthen my own knowledge as well. And I also like it because there's only like 14 people watching. So it's not like I'm sharing this info with like a jillion people out there. So that's it. Is trading NASDAQ more risky? Absolutely, it is more risky because it's a thinner market. And what happens is you get these orders that are on the book here, and they can pull away at any moment, and that will affect the price, right? So you can have the market moving even though there's no trading taking place. And this can happen on any market essentially, but NASDAQ is more volatile. So definitely something to be watching for. Also, NASDAQ is a great market to trade when the conditions are right, but the conditions are not always right. So you need to learn how to filter out the conditions. What do you usually do after a set of bad trades? This goes into recency bias. I made a video talking about this the other day. I think that you should not give precedence to recent trades. If you took 3 bad trades in a row, the 4th trade, you should not manage it differently. If you take a 4th trade, I imagine you had a plan for the next trade, right? So you took 3 bad trades, and now you have a 4th one, you planned it out and everything. If you give into your recency bias, you're going to be more risk averse on that 4th trade. Even if it goes in your favor, you're going to be too quick to cut it, right? So what's really important is really do not give any precedence to those recent trades. You had 3 stops in a row on the 4th one, don't cut it break even if it's going well, okay? Now, if I'm taking trades and they're going against me right away and I'm always wrong, that is indicating to me that I'm not reading the market correctly. And if I am seeing that this is happening, then I need to stop trading very quickly. So that's what I got to say about that. So if I'm taking trades and they keep going straight through me, so my strategy relies on me being able to read the volatility, okay? And if I get into a trade and I see that I was immediately wrong on that, it means that probably the volatility condition has just changed. As soon as I entered the trade, the volatility condition has now changed. And I either missed something or something changed right now and I got caught in that moment. So it's kind of tricky. It's very, very tricky. That's why it's very important to respect your risk limits at all times and have processes in place for how you manage your trades. I'm a big fan of scratching trades. So if I get into a trade, I might have a stop like of a few points, but in reality, the plan for the trade is actually not even to let it hit the stop. I'll be out of the trade before it hits the stop. But if I start seeing in the environment where my stop is getting hit a lot, then that's indicating to me that I'm reading the volatility wrong and my orders are probably too close. And in that case, I gotta stop trading until I understand what the hell's going on. How long did it take you to learn read order flow? I think I've been into order flow now for over a year. You're talking maybe about a year and a half to a year and 3/4. So that's how long I have been studying order flow. Before that, I didn't know anything about order flow. I was just looking at technical analysis. I do think that order flow does present a great way of really zooming in to seeing how the market is reacting to those participants and those orders, you know. It is by no means an end all be all, but it is a great way of getting that confirmation. And it's also something that requires constant learning and development. And that's what's really hard, because like I was describing to you earlier, the order flow and the type of movements we are seeing, it changes on a session to session basis almost. And this is what's really, really tricky. Now you could say on average, the market tends to favor a certain type of trading. This is something that I've found to be true. But every now and then you will get these days where none of it works anymore, and now the market's just favoring breakouts all day, you know? So you get a trading range and then it'll just rip one way and then it keeps going for 20 points. And then you get a trading range, you try and buy a pullback, there's never a pullback, and then the pullback ends up becoming a move, you know? So some days favor that, other days are favoring, you know, a trading range, a breakout, failure, back into the range, goes all the way to the other side, new trading range, tests the previous range, comes back to the old previous. So, you know, that's like more of an orderly condition rather than a market that seems to be driven purely on momentum. So I think it's really important if you do day trading to understand these types of conditions and how they change around a lot on a day-to-day basis. You know, a lot of traders will give themselves problems. They'll say, man, I suck at trading, you know, because you might have had, you know, one green day and then you had 3 red days. But really it was just probably a matter of the fact that that one green day you were reading the market right, and then you tried to trade the same way the next day and it didn't work because the market changed and you were totally stuck in the old mentality, you know. And that's what day trading is all about. It's about really just going with what you're seeing right now, adapting to what you're seeing, and how can you trade it, how can you control your risk, and how can you trade it based on what it's doing right now, you know. So that's all I gotta say. And that ties into the fact that the whole financial industry as a whole, now this is some deep stuff here, I believe that the whole way trading is marketed and the whole way people perceive trading is so that traders are holding on to trades longer. That's the first thing, because they're always trying to go for big movements, because they see the NASDAQ ripping up 100 handles and that triggers the euphoria in them, right? So that's why I would say that the majority of traders are seeking for big movements all the time. And that's why they hold trades. They will hold them when they're in profit, and they will hold them until they go back to break even. They will hold them when they're down money, and they're gonna average it when they're down money, because they're seeking for bigger movements. I believe that trading is not about this at all. So that's it. I think that's a whole misconception of the industry of trading. I don't think the point of trading is to go for big moves. And again, it depends on your time frame too. If you're trading on a daily time frame, then you're going for movements that are relative to that time frame. But if you're trading on an intraday basis and the market's moving around 5 points and you're going for 20, then you're not playing the right game. That's my opinion only. Okay? A bracket, you mean like an attached stop and attached limit? Yes, absolutely. I'll always use an attached limit. Always have an attached limit profit target. Always have an attached stop loss. I've seen guys that trade without stops, but these are pros normally. Guys who can trade without stops and make money almost every day trading. Normally they either have a much higher risk tolerance, which is, I personally can't do it, or they're very experienced in what is called intermarket spreading, which is a very advanced way of trading. So if you go and watch some videos of this one guy, his name is Trading et Analyse. He's a French guy from France, and he does this kind of stuff where he's got a bunch of DOMs on his screen and he's trading. He'll put on a long on the NASDAQ, or no, for example, he'll put on a long on the S&Ps, and then if he's offside on the S&Ps, he's gonna start shorting the NASDAQ, right, to hedge himself. So he has like a reflex to go into the other market and hedge himself and do what is called a spread trading. And he doesn't trade with any stop losses. So that's like a very advanced way of scalping, you know? I don't do that. I just scalp the rotations on NASDAQ. That's it. That's a good question. Like I was saying to you guys before, it depends on how much it's moving around. So if it's moving around 3 points, I tend to avoid it. If it's moving around 5, that's good. So if it's moving around 5, you should be scalping for 5. If it's moving around 10 and more, you got to be a little bit careful in that environment, I would say. But basically, to answer your questions, how many points to risk and what sort of reward? It's all about how much it's moving. That's what you gotta know, man. If it's moving around an average of 5 points, then on average, you should be looking to make around 5 points. If you're looking for 10, you're gambling because you don't know if it's gonna go for 10. So you can see, you know, look at my DOM right here. You see, this is where the volume is, and I've got, you know, some standard deviations. The standard deviation is based on the amount of trading for the last, in this case, 21 bars of this range chart. And all it's doing is it's giving me an average for how much the market is rotating around. Now, by no means is this perfect, because this is data, it's basically generated from past data, but it is still giving me an indication to, on average, how much is it moving, you know? So when I'm trading it, I need to be looking for how much it's moving, not more than that. And I've messed this up so many freaking times, I can't even begin to tell you how many times I messed it up. I even messed it up yesterday, okay? So I traded a breakout yesterday. It was a great trade. The setup was an A1 setup, okay? Now, the market was moving. It was in 4s to 9s. That was the rotation. We were trading 4s to 9s. So I was long at the 4s, okay? And I was long on a breakout at the 4s, and the overshoot was around 3 points. So my scratching range was between 4s and 1.5s. If it's not bid at 1.5 anymore, you get out. It's a scratch. But in this case, the trade was bid at 1.5, 4s, and it broke out. Now, I got filled on this trade at 15 and something because I chased it a little by a point, because there's sometimes with the breakout trades, you just have to chase them. By a point, it's not the end of the world, right? Because those are trades that are make it or break it. It either goes right now or it doesn't, you scratch it, right? But this was my mistake on the trade. And I can even show you the recording if you want. I get in this trade, and then I'm in profit on 2 lots on the micros, and it traded up to 19 and something, 9s, right? It was 4s to 9s, and my limit orders, I had them at 20, at the even number, man. For whatever reason, I was so convinced that this market was going for that even number, but I knew already. I just finished telling you that the market was trading 4s to 9s in 5-point ranges, so the profit target had to be at the 9s. Not at the 20s. I don't know if it's going to go to the even numbers, but I know on average it's going to go to the 9s, okay? So what happened, the market went to the 9s, and then it just chopped a bit, and it traded a lot of volume at those 9s. and then it started to chop, and then it went against me, and then it hit my stop. And it hit my stop really fast too. By the time it went against me, I didn't even have time to scratch it, and I got fully stopped on 2 lots on the micros. So that would have put me down, I think, like 17 points or something. Anyhow, no, about 10 points. The stop was 10 points, but at that point, I would have been down 17 points on the session, which is a little bit annoying, right? To have a trade go in your favor by 4 or 5 points, and then realize that it was in your target zone, but your limit order was 1 point too greedy because you placed your limit order outside of the range that it was moving. Yeah, so that's the mistake I made. All right, guys. That's all I gotta say. That's my story from yesterday. So I wish you guys a fantastic weekend. Rest well. Don't go out to too many places where there's a lot of people, because their toxic energy is gonna wear off on you, to say the least. And if you want to be a pro, you don't need outside energy entering your sphere. That's what I gotta end it on. All right, guys. Thanks for being viewers. I'll catch you in the next one. Okay. Have a great weekend, and like the stream if you're here.